Hello everyone, welcome back to this week's Technical Insights. US equity indices reversed the previous week losses to post the first weekly gain for 2025. Easing core inflation rates published last week helped push US government bond yields lower, and big banks in the US kick off the Q4 earnings seasons on a very strong note. The Dow Jones Industrial average added 334 points or 0.78% to end at 43,487 points. Broad index S&P 500 index gained 59 points or 1% to close at 5,996 points. The Nasdaq Composite Index also advanced 291 points or 1.51% to finish at 19,630 points. Big tech stocks were higher on Friday as shares of Tesla was up 3%. Chipmaker giant Nvidia also jumped 3.1%, while Google parent Alphabet shares added more than 1%. Those gains came after investors saw back-to-back inflation reports showing softening inflation pressure. The core consumer price index rose less than expected year-on-year, and the PPI data also had a smaller than anticipated increase for December. This data caused the 10-year US Treasury yield to pull back sharply as hope for multiple rate cuts this year rose. For the week, the Dow and the S&P 500 both advanced 3.69% and 2.91% respectively. Both indices posted their biggest weekly advance since early November when Donald Trump won the US election. The Nasdaq Composite Index also climbed 2.45% for the trading week for its best weekly performance since early of December. Strong earnings from major US banks also boosted stocks widely last week. Shares of Goldman Sachs and Citigroup were each up about 12% for the week, while JP Morgan also added 8% in the same period, leading the Dow Jones to outperform among the three US indices. In Asia, China and Hong Kong stock closed higher on Friday and ended the week with gains as a slew of better-than-expected Chinese economic data lifted sentiment. The Hang Seng Index rose 0.31% or 61 points to close at 19,584 points. The Hang Seng Tech Index rose 1.4% or 62 points to finish at 4,479 points. China's economy ended 2024 better than expected, helped by a flurry of stimulus measures. Their economy grew by 5.4% in the fourth quarter from a year ago, significantly beating analyst expectations. But the growth was unbalanced, led by industry and exports, raising concerns that structural problems may deepen further in 2025. China's December data showed industrial output far outpacing retail sales, and the unemployment rate also ticked higher, highlighting supply-side strength of an economy running a $1 trillion trade surplus, but also shows that it was weighed down by domestic weakness. For the trading week, the Hang Seng Index rose 2.73%, and the Hang Seng Tech Index jumped a massive 5.13%. China top industry foundry SMIC surged more than 20% last week and closed at Hong Kong dollars 39.45, its highest since July 2020. Technology and semiconductor shares led the gains in China and Hong Kong, as investors traded around the theme of independent innovation amid the threat of new trade war with the US. Back to Singapore, our STI index was up about 9 points on Friday or 0.25% to close at 3,810 points, building on the gains that we saw on Thursday, 0.76% jump. Big winner on the STI on Friday includes Sembcorp Industries up 1.26%, SIA up 1.11%, and Jardine Matheson Holdings up 1.07%. For the week, the STI rose 0.24%, but managed to reverse last week's losses after we touched a 17-year high at 3,887 points. Sembcorp Industries was also up 3.11% for the trading week after they repurchased 700,000 shares at $5.49 each last Monday, totaling 3.8 million Sing dollars, according to a same-day filing on SGX. The company has acquired 7.5 million shares or 0.42% of its issued shares since April 2024. It now holds about 8.5 million treasury shares with 1.78 billion shares outstanding. The previous week, Sembcorp Industries also reported to have bought back 800,000 shares in the open market for Sing dollars 4.6 million or $5.71 apiece. The Energy and Industrial Development Company has been authorized to repurchase 35.7 million shares under its current mandate. So for this week's analysis, let's look at Sembcorp Industries. Last Friday, Sembcorp Industries share price jumped 7 cents or 1.26% to close at $5.63. For the trading week, the share price rose 3.11%, reversing the previous week loss of 1.8%. From the chart, we noted that Sembcorp Industries share price has been on an uptrend since the low that we see in August last year at $4.35. The rebound in Sembcorp share price in the last 6 months has brought it closer to last year's high of $5.87 in the month of February. If we break this level, the next resistance level will be the 2023 high of $6.10 in August that year. For support level, the first level that we see is the 20-day moving average, which is the white line that you see here, now at $5.50. The next support level will be the lower bound of the Bollinger Band, which is the lower white line, at $5.33 now, finding confluence with the blue and the amber line, which is the 50 days and the 100 days moving average. On the indicators, the MACD is showing a slight negative reading as of last Friday, but it is looking to turn positive this week, indicating the start or a beginning of a new uptrend. The latest RSI reading last Friday was at 59 points, which is a healthy reading indicating strong momentum in the uptrend that we see so far. And the uptrend could accelerate further once the RSI goes above the reading of 60 points. So with both the MACD and the RSI signaling a possible new uptrend with strong uptrend momentum, investors may use the 20-day moving average, the white line that you see here, as the first support level to accumulate Sembcorp Industries shares, targeting the 2024 high of $5.87. Out of the 8 analysts covering Sembcorp in the past 3 months, 6 have a strong buy call and the other 2 have buy call as well. There are no hold calls or no sell calls. And the average forecasted target price is at $6.90 with a max estimate of $7.47 and a minimum estimate of $5.70. And these are the updates that I have for you this week. I hope you do find the information useful. So do remember to like, share, and subscribe to stay updated with the latest market movements. And I'll see you again next week in the next Technical Insights.